Welcome, everyone. Thank you for tuning in. I think we can start, right?
Yeah.
Yeah.
Yep. You going first?
Yeah, I'll go first. Thank you guys so much for tuning in. For those of you who are back from Monday, this is a continuation from for our business finance in the midst of COVID-19 series. So Monday was really about access to capital. Today is going to be about cash flow and just looking at how much money you need to sustain your business. And Friday will be the technical assistance part, where you will get to schedule a one-on-one consultation with either Johnny or Anthony, who are part of Dorchester Bay, who are sponsoring this series, and really kind of look at your personal business finance and what you need to sustain. So thank you guys so much for tuning in. We are FIL, Fairmount Innovation Lab, located up in Upham's Corner. And we are a co-working space as well as a resource for businesses in the community, mainly social and creative entrepreneurship. So we have been doing a variety of series online. Tonight we are having our marketing on a budget series. So if you guys are interested, just like throw me like a message through the chat, and I can send you guys a link for that. Next week, we also have a goal setting series that's going to be starting, as well as we have a number of wellness series. So please be sure to connect with us. If you have RSVP'd, I have your email, so you will be getting our newsletters. If you haven't RSVP'd, please make sure that you do. Or send me a message through the chat. And I don't know if I said this, but my name is Joelle Fontaine. So I'm just going to throw it over to John. Thank you, guys.
Thank you. Thanks, Joelle. Johnny Charles, Director of Economic Development at Dorchester Bay, located in Dorchester, catchment area, North Dorchester. We're affordable housing developer. And particularly, we have programs that stretch across different aspects into individuals' lives. When we talk about community organizing, financial literacy for young people, adults, learning tech goes home, so learning how to use a computer in general, the gamut. So I'm not going to get too much into that because I think a lot of you were there on Monday, so heard a little bit more about Dorchester Bay. Anthony, say hi, introduce yourself, and then I'll start it up.
Hi, thank you, Johnny. Good morning, everyone. Glad to see you guys attending today. This will be a great session. Johnny's going to present a spreadsheet and just a way to track some numbers and some financial aspects within your business. Again, my name's Anthony. I'm the loan officer with Dorchester Bay, and I also work with small businesses with regard to technical assistance and business consulting. Generally, I invite a client in, we'll meet face to face, but now in the new age, the new day, it's all Zoom and electronic. So in any event, I'll hand it back over to Johnny.
Thanks, man. So
real quick, Johnny, can I just interrupt real quick?
Yep.
You guys, any of you guys who are able to turn on your video, it would be awesome. You're obviously, it's not mandatory, but it is different now that we have to be online. So it would be great to see your faces. And then also, if you guys can, in the chat, if you could just say your name and your business, the industry that you're in, we'd love to have a better understanding of the industry that you're coming from.
Thank you. I was just about to go to the piece about being able to see them and everybody else that's in here, only because I am admiring your background, Joelle. You've got the whole setup back there as a true artist. And then Anthony, an artist in his own right with the dolls in the back. So I was admiring your backgrounds, and so was trying to, at that point, I was going to use that as a segue to talk a little bit more about, hey, it'd be great to see you all. But if you cannot, no worries. I know some of y'all probably just rolling out of bed. Some folks got the rollers on. There are other folks that just don't want to be bothered, just trying to get this information now. So we get it. So we'll take you as you come. We've got some folks here. We've got Jason, who is looking to start up a brewery. That's an interesting one. That's a good one, only because breweries right now are struggling, mainly because majority of their assets, particularly are place-based and they're in that space. And so it's all connected. And so without the traffic flow, that's pretty tough territory to be in. Okay. So somebody didn't brush their hair this morning. I hear it. Listen, I can relate. Let's see, we've got event decor, design for all types. So event planning and design, okay. And then tarot readers, spirituality business, all right. From a financial model perspective, I'm not as familiar, but I can imagine. I can make some guesstimations, and then we've got somebody who doesn't have a camera. I hear it. No worries. From Canada, complementary and alternative medicine clinic, focus on CEO and massage therapy. Oh, someone puts their camera on. Nice to see you. All right, we got Little Celebration, children's event rentals. All right, cool. Feel free to keep them coming in. We'll try to acknowledge you as much as possible, and we'll go from there. So, as a proper introduction, just want to give thanks for everybody who's in this space. Thanks for making the time to be here with us. Yes, we're taking the time to be on, but we appreciate the fact that you are as well, because you didn't have to be here. So we want to acknowledge that. And then second, not that it matters to anybody here, but I think for me, typically, so I'm usually a pretty early bird. And so today was tough to get out of bed. Aside from the fact that it's cloudy outside, just because we've been working around the clock on different initiatives. So for those of you who listen to Code Switch, I'm a fan of Code Switch, and usually they'll ask the question of what song brings you life. And so I played this song a couple days ago on Monday just to try to get it going, and because I thought it stuck to the theme of what we were talking about. And so I'm gonna play it again. So it kind of just as an intro. Someone said they love the song. Okay, cool. Listen, my people. So I'm gonna play this song for about a couple seconds just to get us going. I mean, it's pretty much self-serving for me because it gets me amped. And then, with your permission, I'd like to play an outro song at the end, and it'll most likely be the same one as Monday. So for those of you who were here on Monday, here we go again. For those of you who are brand new to the space and this webinar, I hope you enjoy. So let's get it started.
We can't hear the song.
Can't hear it?
No.
You still can't hear it? You can't hear it?
No, the audio's not working, Johnny.
Okay. It works for me, so I apologize. Okay. Well, that didn't work out the way that I wanted it to, but it's okay. It's more than okay. All right, so let's get this started. So I'm gonna open up and share my screen. And if folks can just acknowledge, let me know if they see it. Thank you. Anthony, you see that? No? Okay.
Is it just a white blank screen that you have up?
Let's see. It shouldn't be.
What I see is a white blank screen too.
Right, okay.
Okay.
I know if I had slow internet. It's still buffering, still loading.
What about now?
I see a little formula at the top.
Huh, okay. let's see. Make sure you guys get the whole thing.
Perfect. That's
Okay. You see the cover sheet?
yes.
All right. And you can see this.
Yes.
Yes.
All right. Perfect. All right. Cool. And just so everyone else knows, because I only have a limited few up here in terms of on the grid, I am relying on Joella and Anthony because I can see them to let me know what they see on their screen. So if folks happen to turn their video on and you're not getting any type of acknowledgement, at least for me, it's because I can't see you, because I can only see 6 at a time from my grid unless I go through each particular section. So just want to put that out there. All right. So before we get started, let's do a really quick recap of what happened on Monday. And I think that's pretty important to do. So obviously we did introductions. We talked a little bit more about the element of trust in working together, particularly in lending. We talked about our fears and our hopes in lending and finance, and then focused a little bit about COVID-19 for some of you. We also learned a little bit more about, or heard a little bit more about, some of you, it might be a refresher. We talked about predatory lending, and then we went into capital and different forms of capital. We defined some of those as debt, equity, receivable financing and contracting or invoice financing, as well as crowdfunding or crowdsourcing. And then we talked a little bit more about available resources as it relates to the response to COVID-19 and other places that you can look for those grant fundings. And a lot of that information should have been shared with you already. I know I was in the message, so in terms of the presentation in a PDF format. So you should all have that. And as always, if you have any questions related to that presentation, just let us know, reach out, and we'll be happy to answer those for you. So one more time. So we talked about debt. We talked about the fact that we do debt financing, particularly the way you think about that in more simple form is that there's you're taking out a loan. In that loan, there's principal and interest that you're paying down on, or that you're paying towards, and you're making those payments once a month, right? It's a set amount that you're paying once a month for the duration of that loan. And in lending terms, we refer to that as terms. You have terms, and within those terms, they could be defined by months, or it could be defined by a total of years. So we're going to take a look at what debt financing looks like in real time in practice. And then we'll talk about some other pieces too. That's a little bit more, I think, of a heavy lift. We'll speak on the topic of depreciation, what that looks like, really in a very simple form. Here are the things that we won't do. We won't necessarily go into the balance sheet. We won't go into the cash flow statement. I think those two pieces are awesome, and I'm eager to talk about them. We can probably touch on them on the third installment of this conversation, which is on Friday. The reason why I didn't want to bring those, because I think it'd be overwhelming at this time to bring all three financial statements. Particularly, we're going to be focusing on the income statement / profit and loss, because that's what we look to when we invite you in for a general conversation about lending and accessing additional capital for your business. And so we're going to focus on that. And then we're going to focus on a specific area called debt servicing, pretty much paying down your debt and how that breaks down from a ratio perspective, because all lenders are looking at it that way. All right. And then so before we dive in, one more disclaimer. I think this is a woo-saw moment for those of you who are less inclined to talk about finance, less inclined to talk about accounting. And I know particularly the communities that I'm from, that I represent, and the individuals and family members that I know relatively well, it is oftentimes tough to talk about that, especially when you've never really had much of it. So in balancing your checkbook and in balancing your accounts, it can be really really tough to kind of process all the things that you need to think about. And I know from personal experience how that relates to credit, how that relates to caring for others, how that relates to putting together projections and ideas for your business can be rather tough, because there's so many things that's scary when it comes to thinking about or talking about finance. And so oftentimes as human beings, it's hard for us to admit what we don't know. And it's hard for us to talk about our vulnerabilities, right? Particularly in a space like this. So I just want to acknowledge the fact that we understand that for some people that, it could be a tough space to be in. So what that means is that if there are specific questions or concerns that you have as it relates to the numbers, whether it's defining something or just not really getting it right away, please feel free to, send me a chat, by chat, a question. And you can send that to me individually. It could be private. You could just say, hey, Jay, I don't really need you to say exactly what this question is or my name, but you can, I was wondering X, Y, Z, and I'll make every attempt in not necessarily disclosing where that question is coming from, if you feel less comfortable sharing that way. All right. So I just want to acknowledge that really quickly. And in doing so, as I'm acknowledging this, I want to be clear that as I walk through this, I'm going to try to be intentionally slow about it, because I know it's easy to get lost in some of this information. And for those of you who are a lot more familiar with the numbers and are very, very much comfortable in this space, feel free to shoot out your questions as well. There might be some areas that we don't touch on, that we're not touching on, and most likely those are very intentional on our part, because we also know that folks are on different parts of the spectrum. There are those who are on the earlier end who are just saying, hey, listen, I just need to understand what it means for me to net or cash flow, because I'm not familiar with those terms. And then you might have those who are saying, hey, listen, help me put together a balance sheet, because I'm interested in really kind of putting one together. And all of those are welcome in this space as well. All right. All right. I'm just looking at the chat, just making sure there aren't any specific questions that I need to touch on just yet. William, I've got your introduction here. I'm not going to read this whole introduction. This is powerful and I appreciate it. And let me try to acknowledge you in a Q&A a little bit later, if that's okay. And I know you're not shy, so feel free to send out your questions as well too. Just specifically so people know, I know you're a publisher for online guides to Black Boston. I've got your website here and your impact and your reach. So it'd be great to connect. All right. All right, so I have, be patient with me. I've got this grid up, and I want to make sure that it doesn't necessarily impede too much on this Excel sheet. So, hey, Ann, can you do me a favor? As these comments come in, can you just let me know what's a question that I need to address and what isn't? And if you can, and if it's a comment that's coming in, it's not necessarily a question, feel free to comment for me, just so I'm not necessarily clicking the chat function every single time.
Yes, I'll monitor that.
Thank you.
No problem.
All right. So I'm assuming everyone can see this and it's clear. So what you should see up here are a couple of things. So I'm going to start from the top, right? So the first row here, we're looking at actuals. And before we start, let me just say this. I had a particular business and industry in mind. And so there are a lot of assumptions that's gone in here that's actually related to a particular business type. And whether it's at the end or whether it's throughout the presentation, if you can guess what that is, what we'll do is provide a prize at the end of all this. And we'll have to send it to you if you provide us with your information. But we're willing to offer a prize for those who can figure out what kind of business this actually is. All right. It's probably going to be helpful to wait towards the end. But the first person who gets it, we'll make sure to send you what that is. Okay. So, but in order to do that, you'll have to actually verbalize what your answer is. Don't send it through the chat because at that point it'll get overwhelming if we get so many all at the same time. So, all right, cool. So let's start off on row 1. I think this is pretty self-explanatory in terms of what we're measuring here. We're measuring dollars by the thousands for the most part. This should obviously be some areas where it's less than that, but we're obviously dollars in thousands. And then I guess, and I'm sorry for all the disclaimers, but the other piece of this is too, as you're looking at this, keep in mind that we are going to share this format with you. So if you're looking at this and going, hey, you know what? They have this listed here, or they place their Q1 and Q2 in this particular column, don't worry about that. For your own benefit and for attending and for being a part of this space, we're going to send this out. And I think Joelle is going to send this out, or myself or Anthony will send this out either on Friday or immediately after this webinar. But don't feel compelled to write down notes simply because you're trying to capture the format. To be very frank and honest, the format is actually not what's important. The format is great, and it's always good to present your information in an easily read way and manner. But I'm less worried about whether or not if you get this format down. What I think for me, what would be idealistic, at least for me as a goal, would be whether or not you understood the information that we just talked about, and whether or not that you built a little bit more to your finance vocabulary as towards what you need to be measuring for your own business and how to put your numbers together. So we're gonna, I've said this before on Monday. In order for Friday to work in terms of technical assistance time, you're gonna need to put together your own financials. And so we're gonna send this out in preparation for you to put your financials in it. And if you don't get a chance to, we get it. But it'd be good for you to start putting down your numbers down and then having some type of in real time and real practice experience in doing that yourselves. So again, we're going to send you this format. You don't necessarily have to take notes down in terms of how to put it together. We'll send it to you, and whatever the functions in here that you want to figure out or learn, we'll try to capture that for you as well too. All right. So now that we got that out the way, I just need your attention. Okay. So for the first row, obviously, we're measuring dollars by the thousands. So there's nothing in here that's, it's going to be a million or trillion in terms of dollars and units. So we want to put that out there first. The second is, again, we're looking at a couple of things, right? So, and I'm going to go back through this. We're looking at actuals because whenever you're talking to a lender, they want to know what have you been doing leading up to when you're looking to borrow dollars and money, right? And so they always want to know what the actuals are. If you're a startup business, that's completely different. So everything's a forecast, right? So a lot of our focus will be on your experience leading up to this first initial conversation with us. Okay. And that experience needs to really kind of indicate that there's a demand for your product and service. Aside from that, if you're an existing business, or if you're a business that's just become legitimized with your documents, the question is going to be, have you been doing this? If you have, what does it look like on paper? What have you been producing from the standpoint of revenue that's going to indicate to us that this is a great deal? And when we say good deal, what we're really looking at is risk, right? So when we say good deal, we're saying what is enough, moderate, or high or low level of risk as it relates to your business, all right? So first row, actuals, what have you been up to? And then for the rest here that are in blue, it's all what we budgeted for. Okay, so this is what your budget and your projections moving forward, and we've done this for a duration of 12 months. And And then, if we get an opportunity to work with you, work together, we could put a projection together that's beyond a year. But for the most part, for us, what's really important is the next 12 months, because most likely we're going to lend you dollars. Within 30 days, you're going to start paying back. We want to know how that first year is going to look like, and what are your assumptions, which is a great segue, right? So before I get to assumptions, we also broke things down to what's quarters, because it's really important that you all know what your quarters are, because this also aligns with seasonality effect. And we'll talk a little bit more about that when we get to the numbers. But seasonality has to be included in your numbers. And what do I mean by seasonality, right? These are the different times of the year, and we're not talking about just the weather. We're talking about the different times of the year where your business is up and when it's low. And so when it's low, what does that look like in real time? And how are you experiencing that? And so that we call that the seasonality effect. And so oftentimes you want to break things down into quarters. Okay. The three major buckets that we're going to focus on are assumptions, also known as budget. We're going to call them assumptions, and we'll come back to why this is important. The next is your profit and loss, also known as your income statement. Majority of your projections are going to be in this particular format. And then this final piece is supporting schedules, debt service coverage. We're going to break this down into ratios. The debt service is what all lenders want to know. Is pretty much, can you service the new loan that you're requesting from us? Do you have enough cash flow to get through month in, month out, pay us, and then earn enough to sustain yourself? Okay? And that's different from break even, right? So break even is like the bare, you paying for all your bills and not necessarily reaching profitability. That's a little different. Debt service is if we're including both in in addition to your operation costs, an additional debt. Can you pay that and still earn a little bit more? What does that come out to? And what is the bandwidth after that? Okay. And I see some videos in terms of actual visuals. So people are actually showing themselves. Thank you. Appreciate that. I'm going to ask for those of you who are on camera, give me a thumbs up if you're ready to move forward. Nice. All right, cool. Okay, let's get into our first section. So again, as I mentioned before, and for those of you who just hopped on, I want you to also keep in mind that we're going to be sharing this format with you so you can populate this on your own. So I just want to put that out there so you all know. Okay, so here's a couple of things. What tends to happen in our everyday is that business owners come in and they put together profit and loss and projections, and the projections have all these numbers in it, and then we say, okay, this is great that you did that, but what does it all mean? So meaning, what are the assumptions that go into your numbers? Like, what in the world told you that you're going to be getting this many unit of people at this particular time? Like, so what is that? So a lot of what supplements that in terms of answer are usually going to come from a business plan or a marketing plan. So for us, we also know that business plans are oftentimes serve as a barrier to folks actually starting. So we don't necessarily require you to bring a business plan, but the added layer to that means that your financials need to make sense for us in order for us to invest. Okay, so here are the assumptions here, and I'm going to walk everybody through this in terms of what we mean by this. So again, these are assumptions for the actuals, and then also projecting out through April 2021, right? So revenue assumptions. So we've got this stuff broken down. So we've got revenue, and then we've got for those of you who are less familiar with COGS, it's cost of goods sold. And we'll break down what that is. And then operating cost assumptions. So some general assumptions as it relates to gross margin and then SGA. Is there anyone familiar with SGA? Put your thumb up. No? Yes, no? Okay. All right. So this is sales and general administrative. So what all that means is that this is your operation cost, right? So this is going to be the your fees, your not your taxes, but your fees to subscriptions, your utility bills, your rent, your sales force, the folks you're paying to be out in the field to kind of drive the product and services out, your marketing plan as you have it done, any consultants that you're working with. These are all going to fall underneath this category called SGA. And a lot of the SGA we're going to find underneath the profit and loss section, okay? And then we have your tax assumptions. Now, I just threw this up here. And again, you don't necessarily have to have the same format. But the tax assumptions, and I'm thinking, okay, let's call you a corporation. You have an LLC, and so there's a particular tax rate that you're going to be taxed at. And I kind of threw this up here in terms of, so considering your business and your size, you'll be taxed at 25%. Okay. And I'll show you where all this comes out on. And then moving forward, capital expenditure assumptions. So this is the equipment that you purchased. You already bought this equipment in your business. So as you notice, further up top from column C through E, we're talking about actuals, right? So these are the things that you've actually already spent. And then your debt. So this is the debt that you currently have out. Now, for those who are a little bit more familiar with us, what I put in here for the debt is that oh, you know what? I realize there's something that's off on those numbers, but we'll go back there. So I put a debt here, a loan that you have with us. 177 and an interest rate's at 7%. So some of the numbers are a little off as I'm thinking about it now. And if you catch it, you catch it. But this is a loan that you particularly have out with Dorchester Bay. This is the rate that it's at 7%. And those are there. Okay. So let's go back up. And I'm gonna repeat a couple of things as we go through this, because I intentionally want to go a little bit slow so everyone kind of just get the gist of how we're doing this. Okay. So all these pieces up here, from an Excel perspective, part of the reason why you want to have your assumptions ready to go is because when you say, my revenue is XYZ, the person who's looking at that wants to understand, okay, so how does your revenue break down and how did you get $177,000? So what I put up here is average unit in terms of price. I put sales up here in terms of unit sales, individual unit sales. And then the cost or the amount per unit. So this is the unit itself. The amount per unit is the 80, and then what does that come out to? All right. So and I'm not part of the. If there's any confusion about that, it's probably because I haven't really said what the business is. So I didn't really. So I'm not saying how those numbers mix in with each other. And then for those that are just getting in this, that are coming into the webinar, I'm not sharing what the business actually is, what industry it is. I'd like people to guess that. If you figure it out, we have a reward and a prize for you, and we'll send that to your mailing address if you can share that. But if you figure out what the business is, take yourself off mute and just and articulate what you think it is, and we'll let you know yes or no. All right. So for this mystery business, here's what's going into their revenue once we pull up the profit and loss, and you'll see that there's a sales number, and this is what we're using to calculate the sales number. All right, cost of goods sold. One of the easiest ways to explain what cost of goods sold is, at least for me, in terms of how I understand it, this is your direct cost to your business, right? These are the costs that you absolutely need in order to produce the product or to deliver the service. Direct. Indirect, for those who want to just kind of differentiate between the two, indirect is a little different, where indirect is a cost that you're paying towards that covers so many other aspects of the business, right? So indirect cost would be something that's like, let's say you have a copier. The amount to maintain the copier would be indirect, because the copier serves a lot of different things in the business. Now, a direct cost would be something that's related to maybe material, right? So if you're paying for material, that material is going towards the actual product. That's the only thing that it's going towards. So that would be a direct cost. And so in those direct costs, again, we're doing it by per unit. That direct cost will go in under cost of goods sold. All right. In my cost of goods sold, I have raw materials. I have a direct labor, and that's per hour. I have sales personnel. That's just a salesperson. I was just going too fast. And then I've got the shipping costs per unit. Again, if you figure this out, take yourself off mute and let us know what you think the business is. And then the operating costs, I just have gross margin. Okay. Now, I think gross margin is less important. What's really important is gross profit, right? So gross profit, for the equation for that is you're taking revenue and you're subtracting costs of goods sold. So when you look at revenue, you're going to get a net number at the end of all this, right? But before you get there, before we get to the general expenses, you want to know what is your gross profit. So what are you making before you cover the rest of your operational costs? And so what that means is that you take the base revenue and you're taking your direct costs from the base revenue, and that gives you your gross profit. A lot of and so why is that important? Well, lenders and investors want to know, what are you making on the margin for your particular product? And oftentimes they want to break it down per unit. This has a unit component to it for this particular business. So individuals want to understand, so what is the margin that you're receiving off of this particular product that you're selling? And gross profit and gross margin will articulate that for them. All right, so I'm just going to cross and we're going to go down and we're looking at, okay, so this is what you're budgeting for, right? So everything else now is just projecting out. So I did put in here, so this is so this business for the most part, and if you remember from Monday, part of the 5 C's was conditions. And so one of the conditions that's included in this pro forma is COVID-19, right? And you'll see some of that stuff in here. But this is a relatively successful business. And at some points you'll see that there's a dip in revenue and there's a loss. And so for some of you that's been operating for a little while now, so you're an existing business, some of you might go months without any revenue. And so some of that is factored in here as well. Okay. Are we good to move on from assumptions? Do people understand why we have an assumptions area? Okay, perfect. If there's anything that comes up in terms of questions as it relates to this space, we can come back to it. All right. So what I'm going to do is I'm going to collapse this and I'm going to expand this next section, just not to overwhelm folks too much. And then at the end, I'm going to keep it all open. Okay. Whoa. Oh, who knew all this stuff was hiding in there? Jeez. All right. Profit and loss. Here we go. So this is the bread and butter. Depending on who you ask, this is the bread and butter of the financial statement. And I'm going to, sorry for the pausing. I'm just trying to figure out a place to put your this grid here, because you're right in the middle of the Excel sheet. Okay. So now, and let me just walk through this really quickly. I'm just going to scroll down, and I'm going to focus on this far left category, the far left column, as it relates to the profit and loss categories, and then we can play a little bit and look at some of these numbers that are in here. All right. And again, what usually I would total this this Q1, the Q2, Q3 by quarters, because oftentimes it's really important to know. But for the sake of learning and teaching and walking through this, I felt like kind of overpopulated the Excel sheet, so I didn't want to crowd this up too much. But generally, I would collapse these two so you can see what's just in quarter one. So revenue, again, this revenue number is coming from the number of units that were said that we sold in January. How many clients we're looking to sell to, or that we supposedly sold to, how many units we actually sold, and the unit amount in terms of pricing. All right. So we already did this math earlier. It's already up in the assumptions, and all we did is just place it back down here. So for those who are trying to figure out, all right, so what is that? How did you get the 18,400? The math is already up there. And again, we're going to give you this format so you'll have a chance to play with it. Again, my interest in this is for you to walk away feeling like you know what a profit and loss is, you know how to put assumptions in your profit and loss that are reasonable, and that you understand debt service coverage. And if you get anything else out of this, awesome. Okay, so revenue, we talked a little bit about this, but this is the sales. This is what you're expecting to make. This is how you repay your lender back. This is how you woo the investor. Whether or not you're looking to get equity deal, whether or not you're looking to get a debt finance, whether or not you're looking to get whatever capital you're looking for, whether or not it's a crowdfunding. Individuals need to know how much are you making, and you need to know how much you're making. So this is what you, because it's in actuals, this is supposedly what you already made. And if you look further up here in April, I have here COVID-19. COVID-19 happened, so therefore I did not put a sales number in this area. Some of you are existing businesses, so therefore you're not selling much. I have it all the way out until June. Worst case scenario, that may not be the worst case scenario. Supposedly we're opening the economy back up May 1st or May 4th. We'll see what happens. But for the most part, I have here no sales. So just if everybody's kind of confused about like why that's there, it's COVID-19. Prior to that, I have sales is coming down. And usually if we were in person, I would say, why do you think sales is going down in March? Well, I have sales going down because the threat of COVID-19 at that point became a lot more popular, or became a reality for most people. And then so contracts, bids, and different things started closing down in March for the most part. And I know for us as an organization, our last day in the office, I believe, was March 16th. So therefore, that was really kind of headed towards the middle of March. So if there's any business with a similar cycle, most likely they probably made a little less than what they expected to make in the first place. So, which is why I have only $6,000 in revenue and $6,000 to carry folks over for the next couple of months, which is a really tough place to be, right? Okay, so we've got revenue going all the way down. That's budgeted. Cost of goods sold, again, though that's your direct cost that you're going in here in order for you to put together your gross profit. For this particular business, let's go down really quickly. Cost of goods sold. Cost of goods sold looks pretty strong. It's usually going to be pretty consistent. Cost of goods sold in this one's a little high. Usually, the rule of thumb is that your cost of goods sold is usually 30% of your revenue number. That's usually the rule of thumb. Just for you all to know. And usually when you go out for lending, and we talked about this last time, you're looking to borrow anywhere from 15 to 30% of your revenue. So when you think about that as it relates to cost of goods sold, most likely what you're borrowing for is enough to get you through and to replace cost of goods sold, so to speak. There's a working capital definition that we talked about earlier, at least on Monday, in terms of formula. We can talk about that a little later as well too. But generally, when you're going out for lending, lenders are going unless you're going into a completely different industry, or you are targeting a whole new segment that you're not generally used to, or you're opening up another plant or another location. Oftentimes, the 30% rule or the 15% rule is usually what people are looking for. When you go over that 30% rule, that's a pretty big investment. At that point, you're crouching on your expected revenue. So once you get to that ballpark, so that's why people come to us and they say, you know, it takes so long to get a deal done. You know, like what's going on outside of the paperwork process? Keep in mind, if you got a certain revenue level and you're coming out to us and it's probably like 100% of the revenue that you already make, we also want to make sure that we're not replacing your revenue, because if you're doing that, then that means that you're not generating much revenue to start with. So how are we getting repaid back? So really what you probably need is to really kind of get to the point where you're developing a stronger value proposition for your business, or you're putting together a stronger marketing plan, or you really need to understand your clientele a little bit more and your industry. And that money can't solve that. Okay. So when you think about what you're looking to borrow for, it needs to be very definitive. Oftentimes, you can't just say, I'm looking for working capital. I'm looking for 20,000 and I make 100,000. Okay. It's 20% of what you overall make. So that's generally okay. Are you sure you don't need more than that? But once you get over that 30% mark and you're looking at, you want 50,000 and you generate 100,000 a year, that's 50% of what you actually do. So what are you subsidizing? And what should we be afraid of? All right. That was kind of a side note. So I'll try to bear from doing too much of that. So as we can see, cost of goods sold is relatively pretty healthy across the board, with the exception of COVID-19 striking over here. You've got your blank months. Now you subtract the two and you've got your gross profit. So this is your margin, right? So this is how much you have moving forward, really to cover the rest of the expenses. Because again, we're looking at direct costs and your cost of goods sold, and a lot of your operations is going to be indirect costs that covers other aspects of the organization. All right, so now we're looking at expenses. And then also let me know, send us a comment if we're going a little too fast. I think I'm going a little too slow, but if we're going a little too fast, let me know. Just shoot us a comment or unmute yourself. Either one is fine. So we're looking at general rent cost. General rent will be a part of your overall expenses. And so right here, we're looking at $2,500. For some areas, that's a good deal, and others that's not. And that's even across the board, right? So that's what we call a fixed cost, right? So, and over here we've got some auto expense, we've got purchases, we've got wages, travel, and you'll notice we're gonna dip in travel here post COVID-19 because we want to be smart about how we're looking at that. And so I'm gonna sidestep a little bit as I talk about these categories, because I also want to make sure that you're putting logic in some of these things as well too. One of the worst things you can do for any lender is that you would put, okay, you're going to ignore economic conditions, right? And you're going to say, all right, well, where were we? We got purchases. We have, yeah, well, let's do purchases. Purchases at 1,000, and it's 1,000 across the board for both June, May, and April, right? So yeah, you can be paying that down, right? So if you're a business starting up, yeah, you could be paying that down throughout these hard months. But realistically, are you really going to be doing that? Or are you really going to have 1,000 and kind of pay for a month that you're not really operating in? You know what I mean? So, and I guess my point is that watch your numbers a little bit, because for some, oftentimes they'll put the same number for a couple of different categories and they'll stretch it across 12 months. That's realistically, that's not the reality. The reality is that you have some seasonality. So you've got some highs and you've got some lows. And oftentimes for us, we're going to take a look at your industry. We're going to take a look at the neighborhood. We're going to take a look at the competition. And So some of these numbers have to gel with some of these factors, right? And so some of them go up and some of them go down. So you've got your office fees, and we have that at 200. Some of these, again, are fixed costs. So there are things that are owed every month, and so you've got to pay them down anyway. You've got some professional fees, you've got utilities, meals and entertainment, and I kept them here for during COVID-19, and that's not really smart of me to do, right? So you're not paying an average of $100 a month while you're not in business. So that's on me. And then I put in some insurance, permits, and then we've got this equipment. And I want to hover a little bit over equipment. It's not there. Where do I have it?
Depreciation.
Yep.
Johnny, depreciation, I think, is where you had it.
Yep, it's right there. Thanks, Ann.
No problem.
Okay, so we've got your equipment, your marketing and promotion, and these could be subscriptions as well. And then that's the total, right? So now this is your total expenses. And again, SGA, sales, and your general administration or administrative. These are kind of your fixed and indirect costs. And then you've got your, oftentimes people will just spell it out as EBITDA, earnings before interest, taxes, depreciation, and accumulation and appreciation. So this EBITDA number, pretty much it's what did you earn before you pay the taxes, before you pay depreciation. All right. Now, depreciation. So in here, depreciation really oftentimes refers to an equipment with a useful life. So let's talk about a little bit more about what that means. Before we do, though, I want to put in here that this is a laptop and a copier. Those are the two things that depreciation is covering. All right. And again, if you figure out what business this is, let me know. So far, we have no contenders on this one. So we'll see. If no one figures it out, we'll just tell you at the end. But I have a feeling that someone's gonna figure it out. So this particular business or business owner purchase a laptop and a copier, right? This depreciation term is an accounting term. It's so pretty much, and I'm gonna take a stab at really kind of talking about this, but depreciation pretty much, and the way that I understand it, there's a couple of different ways to depreciate an asset, and the way that I'm used to and that we tend to do it is called a straight line depreciation. And so back up. So particularly for an asset of a certain size at a certain amount, you don't necessarily, from an accounting perspective, you don't necessarily want to put the total cost that you pay for that asset on the books all at once. Most accountants, CPAs will say, whoa, where did that huge expense come from? Now, you know for a fact that it hurt your pocket, right? But accounting is a whole different world. So from an accounting perspective, in order for you to protect your liabilities, in order for you to protect how you look to an investor and a funder, you're going to depreciate this usually a large or a high ticket item. And what that means is that you're going to stretch the overall value of that over the useful life of the product. And in order to get a understanding of a useful life of a product, I believe the SBA actually has a schedule that talks about depreciation. So, for a vehicle, depreciation, the useful life of a vehicle might be 25 years, or it might be 10 years. These particular equipment, we depreciated for over 5 years. So we took the amount, the market amount that you paid for it. We then subtracted the salvage value of it, so the determined value at the end of 5 years or 10 years, and then we multiplied that by the number of years, and that's called a straight line depreciation. And again, and it's less so that you understand the formula, It's more so to understand why it's used, right? So really, so instead of having, and I'm just going to say, let's put it out there, anywhere from 30 to 40,000. So if you're thinking about your tax season as a small business and going to your tax preparer, if you're thinking about going up to an investor, and you've purchased this stuff over a year ago or most recently, either or, you want to protect that total expense line. You want to make sure that it's not too high in relation to the revenue, because the revenue always needs to stick out, ideally, as you're making enough to cover costs, you're making enough to pay yourself, and you're making yourself to grow. Because what you're saying is that there's opportunity in your idea, there's opportunity in the value proposition that you're laying out, there's opportunity in your company, and then you. So you don't want to limit that by having this huge cost over your expenses. So what accountants came together and put together was this formulaic explanation of how to stretch out an asset. So that's really what it is. If you need me to explain that again, let me know. If that was helpful, let me know. If it wasn't, let me know as well too. But the depreciation itself is that so once you stretch it out over a couple years, you're gonna take the amount that you get out of subtracting it from a salvage value and dividing it over the number of years that you're gonna keep the equipment, or that or the salvage, the useful life of the equipment. You're gonna take that number and you're subtracting from that number every month and every year, and it gives you a depreciation amount, and that's what we have here. So when we look at that 849, that 850, that's the depreciation amount when we've done that calculation for the equipment. Now, I didn't put the actual calculation in here. I just went ahead and did it and kind of guessed it. But again, what we are depreciating is a laptop and a copier. So that's where that 850 comes from. And I figured it was worth probably spending some time talking about depreciation, because it's a pretty important tool to know and to have when you're thinking about equipment and purchasing equipment. Now, that's different from the culture, right? And when I say the culture, particularly my culture as it relates to both Caribbean, African-American, communities of color, because listen, we're not buying things on credit, and we haven't done layaway in a while, right? And so, if we're talking about depreciation the way we do it, idealistically, I'm not thinking about, oh, I'm gonna break this number down over a couple years. Nah, I'm gonna pay that up front, because I'm not trying to owe Tony. I ain't trying to owe Uncle T, and I ain't trying to owe Day Day, because Day don't give nothing back anyway. So I'm not trying to owe him nothing. So in our mindset, we're not depreciating anything, right? So it's a whole new different logic and ideology to really kind of gravitate towards too. Because what you're saying is, I paid for this up front, but I'm not necessarily articulating that I paid for it up front. In order for my books to look right and my revenue to look a lot better than those expenses, I'm gonna break this down as if I pay for it every year, as if it's a 5-year, 10-year layaway plan. That's how we're looking at it. All right, cool. All right, so we talked about depreciation. I feel like we've exhausted that enough. It's gonna come back again in the next category, and then we're looking at interest. Now, you want to separate the interest. You want to separate depreciation from the general fixed costs that you're paying every month, because you want to know what you earned, right? And this is sometimes a problem with a lot of our business owners, where oftentimes we won't get things on credit. We won't really pay attention to the accounting terminology. We'll pay for things up front. Whatever cash we have left over, we're going to put that in the bank, and then we're giving that out. Right? So, and what I'm saying is, so this is why I say that it's less important for you to write down what's in these formulas. It's less important for you to say, I like the way that this is put together, or I don't like the stylistic piece isn't really important. It's really the fact that you're having to lend this additional thought to how accounting actually works. And again, we'll talk through this on Friday. You have us as technical assistance providers, and so you have the support to really kind of talk through these things and learn it, but it really is a whole different language that you're learning here. And so, again, depreciation, taxes, interest, we're removing from your earnings, because we're isolating what you earned in terms of revenue and what you covered in expenses, and then we're gonna isolate your taxes and your interest and the depreciation costs, because that's a whole nother layer. Because although it's an expense that you have to put up, the difference when you talk about from an accounting perspective, it's actually an impressive expense. The fact that you have an equipment that you're depreciating is actually really impressive to an investor. The fact that you're paying down your taxes is impressive to all lenders, because we all have to work with the federal government. So all of these things, although they sound like, from a culture perspective, I ain't trying to pay none of these things. So therefore, I'm not going to pay attention to it. I'm gonna pay for everything up front. Don't consign me. I don't want nothing on consignment, right? But for the most part, these things are actually impressive to categorize, to isolate, particularly if you're talking to an investor, even if you're talking to family, right? Because that means you got your stuff together, and especially when you're talking to a lender. All right? Cool. All right, again, and then at the end of this is your net income. This is how much you made after you paid down your fixed costs, your indirect costs, your taxes, and depreciation. So this is the actual money that you got going on. So this is the residual. Now, you notice in March, COVID-19 arrived, man. So at this point, you're down in the dumps, almost $5,000. Another $7,000. So supposedly in May, and I just put it up here because I didn't want too many red. I didn't want too many losses. I put that we're back. We're happening in May, and that and you'll notice here that the total net is at 400. All right, because everything's residual and everything's accumulated, and all you earned was about 12,000, but you're controlling for expenses. And if we look at expenses, your expenses are relatively low compared to how much you earn, right? Because you're earning an average of 18,000, particularly for this business, but your expenses are roughly anywhere at the highest amounts at 7,000 on a good month. So that's not a bad place to be. Okay. Now, thumbs up if you're ready to move on for those I can see. All right. All right. Perfect. Thank you. All right. So this is the last piece here, and then we're going to open it up for some Q&A. Supporting schedules, debt service coverage. Okay. Debt service coverage, ladies and gentlemen, that is like the golden term for lenders and investors, because all it means, and you can put it together, what's the debt that you need to service? What's the debt that you need to pay down? And when we talk about debt, particularly when we're looking at from the perspective of loans. So I'm gonna go up here really quickly. Accumulated depreciation. That just means that this is the depreciation that you're paying down, so it's accumulating. I have start of the month, right? So somewhere here, I think for me, and again, your numbers would be different whether you have them or not. I'm saying we started off at $40,000 in investment, and we've been paying down $850 every month. And so that amount, as it accumulates, goes up in terms of worth, but in terms of like the end of the month balance, that's going up as well too. And again, we can get into the finance theory behind all this, but there's a schedule for your depreciation. And then you can imagine once you own more and more equipment, or you're purchasing more and more equipment, this accumulated depreciation piece, this column starts to go up and up and up. But that just means that these are the equipment that you have equity in. Now, debt schedule. Debt schedule can be a lot longer. And here I just put one particular loan, opening balance, and then your repayment. Now, if you're a math guru, or if you figure this out, this 177 should be a lot higher than that. All right. I just put this in here as a placeholder for other numbers. So, but this number should be a lot higher. Your repayment should be a lot higher for whatever this loan is supposed to be. But the general gist of this is that your lender is always going to ask, in a different format, they're going to say, all right, well, who do you owe money to? Who did you borrow from? Right? And what is the interest rate on that loan? Who are they? How often do you pay them back? That's going to, and then, so oftentimes we call that a debt schedule in of itself. So we're going to ask that. So if you have an investor, whether they're private or not, we're going to ask, hey, listen, do you owe money to anyone? Because keep in mind, if we're engaged in a relationship as a lender, as a creditor, what that means is that I need to pay attention to who, what the total cost for your business is. Because, at the end of the day, you may not have enough to pay back the loan. So we need to pay attention to that. And then generally your interest repayment, and then your total debt service amount. So how much you're paying towards every month. And then we break this down into a ratio. So before I even highlight it, this is the total amount you owe in terms of your debt, and we're dividing this by what's appreciated, and that gives you your actual debt service coverage as it relates to the business. Again, so this is your debt against what the assets that you're depreciating against that you're paying down, but they're both debt, which is why this is all about your debt service coverage. All right. Now, there's another debt service coverage ratio that happens when you talk to a lender. And that's going to be the total amount after factoring how much you earn and how much you owe, whether that's credit cards, the whole 9 yards, and rent. And then we're going to look at this, which is the business debt service coverage. When you combine those things, you have a global debt service coverage. And so when we do the global, first of all, if you're anywhere in the 13s, 12s, you don't need to come to us. You're asset rich. You are okay. But usually in the global debt service coverage, we need a ratio that's over 1.25. A ratio that's at 1 is okay. We can go for that, right? But usually most lenders are looking for a ratio that's over 1.25. And you can imagine when you add up all your personal expenses, your personal assets, and then you put that against the business, that it could be relatively strong. And so anything over that 1 is a positive. Anything over that 1.25 is extremely positive. But that's a little different with a business debt service coverage ratio, which is oftentimes in the double digits because assets are relatively pretty heavy and high. All right, so now I'm gonna open all this up now, and I'm gonna do a really quickly. I want to do a really quick refresher and go back over some of this stuff, just in case anybody forgot anything. And then I want to open it up for some Q&A. And set up what we imagine will be a good time for Friday for some one-on-one. All right, cool. Thumbs up. I can move on. Do an overview. Perfect. Thank you. All right. So really quickly, going back up. So we talked about the importance of really kind of articulating quarters throughout. If you're an existing business, it's critically important to have actuals. So how you've been doing so far and what you're forecasting. The reason why we have assumptions up here is because we want to know what's going into your logic, your thinking when it comes to the numbers. And oftentimes that's completely missed in most cases. So which is why we wanted to put together something that says, all right, well, here's what you ought to be thinking about when you put these things together. Now, again, this is not a one-size-fits-all approach, particularly by the way of this Excel sheet, right? And so we might have to play around with this to meet the needs of different industries. This is a specific industry, specific clientele. And so, so based on our conversation on Friday and beyond, we can customize that to get to a place where it's absolutely resonates with your particular business. Okay. In doing that, we talked about revenue, the assumptions. So what are the unit costs? What are the unit prices? Who are you selling to? And what does that look like in number? Cost of goods sold, which is also known as COGS. So this is the direct cost that goes into what you're producing and selling. your operating assumptions. We broke these down into a ratio number and a total number. Pretty much these are your fixed expenses. And then we went to some tax assumptions that I put in here and your capital expenditure assumptions. Depreciation, the rate of depreciation. And these pieces are less important. It really comes down to your business. What's most important, outside of building assumptions and articulating your assumptions, it's building out your profit and loss statement, right? Profit and loss, how much are you earning against how much is going out the door? How much are you paying for month in, month out? Gross profit, that is the product of revenues from cost of goods sold, which is going to give us our margins. And then we're looking at your total expenses and what are we accounting for month in, month out. And then for us, when we do technical assistance, once we have this laid out as an existing business, then we say, all right, let's target purchases. Let's target wage. Let's target travel. Let's target these bank charges. Do you know what the bank charges are? And what are you doing to address that? Is that too high? Do you need a different bank? Your wages, do you need less people? Do you need more people? That then allows us to get into a conversation that is about really advancing you beyond where you are, all right? And then we broke down here at the end of this, what is total expenses? And then what is the total earnings before we get into interest, depreciation, and taxes. And then we talked a little bit more about debt service coverage, what that looks like in a ratio format, and what's included in managing and servicing debt. And I still had this blooper up here. I know Joelle had told me. She was like, brother, you spelled that wrong. So I apologize. So let me fix that. My bad. No one told me this. All right. ESL, baby. Thanks a lot, guys. We talked about the supporting schedule, the debt service coverage, the importance of that. And again, this is less important when you're putting your profit and loss together. It was just important for us to make sure that you have some type of pulse on this, because overall it's important. And you should be thinking about depreciation, because you should be thinking about getting assets in your business, and really articulating what those assets are. And some of you already have those assets. A lot of you have computers that you use. If you're a graphic designer, some of you have, if you're selling clothes and apparel, that's inventory, right? So you have these assets already. And so we can talk about the different asset classes and what should be depreciated, what isn't. But it's particularly important to keep those things in mind. All right. So that is what we have for talking about profit and loss and managing cash flow. We intentionally did not go into the cash flow statement, and we didn't go into a balance sheet. I think you can do a whole session on one particular statement. What you did a session on is really the income statement, and that's one of the three critical sheets. The next two is a balance sheet and a cash flow statement. Those are all relatively important, but the profit and loss, considering where the business, what we assume is the business level and scale, profit and loss is the most important, and your projections are the most important things to keep in mind. What I think, well, I'll hold off on what I think. I think I've been sharing enough of that. So I'll share that at the end. Before we go into like actual questions, right? And I start fielding what questions is what, let me ask, did anyone figure out what business this is? What kind of business this is? Anyone want to take a guess? And if you're guessing the business, I'd kindly like for you to unmute yourself and articulate that. What business do you think this is?
The rate could be plumber or graphic designer. It seems to average out around $56.25 for that whole month of 225 hours.
Yes. Okay, so you said either a plumber or a graphic designer. So I'm gonna need you to choose one.
Plumber.
Okay, that is wrong, but I appreciate you. I appreciate you. And you know, I expected you to say something too. I knew you would be the first one. So I appreciate you, man.
Thank you.
so before we move on to additional questions, anyone else want to take a guess? Anthony and Joelle cannot participate because they already know this. Does anyone else want to take a guess? Don't be shy either. It's okay to be wrong.
Hello.
Hello.
I don't know. I don't know all these numbers. I don't even know what I'm looking at. I'm hearing you, but I still don't understand spreadsheets. So I'm gonna guess. Is it like because it says is it like a consultant agency? I don't know. Is it like a new startup business? Because I want to say real estate, but I would figure that the revenue would be a lot greater than what I'm looking at.
That's
but
awesome.
Huh?
That's awesome.
Yeah.
Okay.
Am I wrong?
You're absolutely wrong.
Okay. Absolutely
okay.
wrong. Okay.
I'm sorry. So I'm smiling and I was having a great time listening to you because you're telling me that you are not great at spreadsheets, but yet then you articulated the revenue level and then related the revenue level to a particular industry. That's really all that you needed to know. Everything else, all the minutia here those are details that we can talk about later, but you knew enough to articulate that. So I think you should need to give yourself a little bit more credit. So I appreciate that. Did you come in from the beginning? When did you come in towards the presentation?
I was at the beginning. Once you figured out, you got rid of got your little self, not your little self, but you got yourself together. I was at the beginning. I was at the very beginning.
Okay.
I think you guys were just figuring out the screens and such.
Okay, perfect. Okay, so all right. So then that means if you're still saying that you don't understand spreadsheets or you didn't understand this too much, then I will take that as criticism, constructive criticism and feedback, because the whole point was for you to kind of understand some of the different areas that are in here. It's less so that I expect you to produce the same thing, but it was more so for you to understand these areas that I'm collapsing here. Did you at least get enough out of what the assumptions was used for, what the profit and loss was used for?
I do understand. I need to stop saying that I don't understand something because most times I feel like we understand it.
Yes.
But let me not say that. I understood what you're saying. It is a lot to take in and look at and to follow, especially if we're not like face to face. But I do understand. You did a great job. Okay. You did a great job. I do understand. I think I was just trying to focus on what the business was.
Gotcha. Oh, okay. Gotcha. No, you're good. No, thank you for that. I appreciate it.
You're welcome. Thank you.
Yep. Anyone else want to let me know what are your ideas? What do you think this business is? And I'll open everything up here. Okay. Going once. Going twice. All right. So what I have up here particularly is a fashion designer who is selling outfits and apparel by per unit, and they have a brick and mortar location. Okay, so what that means is that there was a unit amount. So there's a certain amount of outfits or pieces that they're selling per month. There's a raw materials location, so which is a direct cost that goes into their cost of goods sold. There's a labor number here for them to pay themselves, and then particularly one of the things that's well, when I looked into it, it looks like shipping was a part of the cost of goods sold for a lot of designers, unless they have relationships where they're bringing things to the actual client in their clothes. But shipping is a big deal. But that's what that was, and I don't think it wasn't designed to be easy. Because if that was the case, then I wouldn't have done my job to the full extent. But that's what it was. So it was someone who's designing outfits and is shipping them out and has a brick and mortar location. All right. So that's one less thing we're going to send in the mail to anyone. So I am not mad at that. So thanks for all of you that that volunteered to offer your 2 cents. That goes a long way, so thank you. Okay, so I'm gonna turn to Anthony first. Ant, do I have questions?
Yes. One question that came is, what about a brand new business without actuals, but it's a really strong business?
Yep. There's no difference really. If the question is how do you design that, then what we do is, we start from here.
It's all projections, right?
Yeah, it's all projections.
Yeah.
The actuals were for individuals who are trying to, who are trying to see themselves in this particular template. And actuals are always just important because everyone's going to want to see it. So that's why I put it up there.
Awesome. That was really the only one that I caught. If there's anything else, we can have them speak up or send a chat.
Okay. Okay, so at this point, if you are, I think it's okay to unmute yourself and feel free to ask questions as you see fit. If not, we're going to assume that folks get this and are looking forward to getting a blank Excel sheet and working on this and seeing us on Friday.
I'm gonna jump in and say thank you so much. I missed the presentation on Monday because I have to do classroom. CPS is still in effect. I made an attempt to put something together last night. So I would love to get a copy of the blank template so that I can make an attempt to fill it in by Friday.
Perfect. Thank you. I think your signal was a little off, and so I think I captured and heard everything you said. So we will get that to you, and we'll figure out the best way to do that. But we'll definitely get that to you. Joelle, they've had to RSVP for this in order to get it, right? And if not, then okay.
So you guys, it's a lot easier if you guys make sure that you've RSVP'd through the Eventbrite. We'll be sending out all of we recorded last week's session as well as this week's session. Once those are edited, we'll make sure to get those out to you, as well as the presentation, the PowerPoint from last week, and the spreadsheet from this week.
Awesome. Thank you.
No problem.
Thank you. And let me acknowledge you really quickly as somebody that's in BPS and doing distance learning. So I just want to say thank you. Because I think we talk about the folks that are on the front lines and those who are essential all the time, but forget the fact that our teachers are placed with so much burden, because there's the connecting that you tend to do every single day, and then you're having to do your work without connecting, particularly with kids, which is a huge thing. And then now having to adopt distance learning. So for somebody with an 8-year-old trying to figure all that stuff out, I'm just appreciative for you teachers. And so, because I consider you guys frontline staff. So thank you.
Thank you.
Any other questions?
I was curious how you got that accordion effect to work, how you had those, like on the far left-hand side, there's these icons where you expand the sheet and then collapse. Yeah, that, exactly.
Yeah.
Is this Excel or?
Yeah, this is Excel. So each one teach one. So hold on. So what you do is you're gonna highlight the areas that you want to collapse, right?
Mm-hmm.
From there, you're gonna go to data,
Okay.
and then you see where it says group.
Yep.
You go from there. You group.
Ah, gotcha.
And you can auto outline, and then you will go from here to ungroup. But that's where that is.
Okay, very nice.
Yeah, anytime, man. Hey, whatever I know, I will definitely lend it out to you. So no worries. I think that's one of our. But anyways, I'm getting a little too deep on that one. But yeah, anytime.
Thank you.
And then just so, and that's in the spirit of that, if you have too many of these and you want to make sure, if you want to get those things out of the way, you want to press Control-8 to kind of walk through a presentation where you don't have to collapse anything. But if you press Control-8, you can get rid of it, or you can add it all back in.
Okay.
Good question. Okay, cool. So, as I told,
sorry. So just to double check, if I'm a new business and I get a blank copy of this, just focus on the budget forecast projection and worry about the actuals later, correct?
yeah, if you're a new business, you can literally, you can get rid of all that, or you can just erase this up here. That's fine too. But you can just, you would focus all on here and keep it moving.
Perfect, thank you.
Anytime, if we have the opportunity, because what we can do, because we can format this as well too, because we can also format this and just cut actuals out and just make sure that it's all forecasted. So we can do that. So in preparation for Friday, what you'll do is you'll populate everything that's all forecasting. But moving forward, when you get an opportunity to work with Anthony one-on-one beyond this point, what he can do is he can just take out actuals and he can reformat your sheet for you.
Okay, perfect. Thank you.
Anytime. And then, so just so you all know, Anthony's gonna be like, "What? What are you talking about?" I think, and this is in my own head, right? I think what will be beneficial if we do this again, when we talk about cash flow and financial modeling, what would be beneficial for those of you, and I completely implore that folks look into this. If you currently have a business, considering the state of the economy and COVID-19, to really think about e-commerce, right? Really think about how do you sell online? And I think, and we can do this on our end, where we can create something very much similar to this, but do it from the standpoint of what does it look like to be a startup business online, or a startup online business, and see if that would be helpful or essential to everybody else. Because I do think that considering the new normalcy that'll be placed on us relatively soon, I think business is going to be really, really shifting to the online platform and online presence. I mean, I think we have for the most part, but I think this reminds particularly people of color that it is the time to do that. So whether or not it's investing in coding, whether or not it's investing in an existing business where you can buy yourself, there's a number of different websites where you can actually buy a business, even if you're not really thinking about doing that and you really want to just plan for it. I think the one that I've looked at that I'm a fan of, because they send you subscriptions, is called Flipper.com. And this is not an endorsement. It's just for you all just to check it out. So it's FIPPAR.com. And I think the average amount, and these are like in thousands, you're looking at anywhere from $5,000 to $15,000 in paying for it. But typically they provide you a subscription and tell you a little bit more about how to go about buying a business, and what does it look like in terms of measuring a business online. But I think it may be helpful and useful for a lot of individuals. So for those of you who are talking about being a startup, really think about what does it mean to be a startup in this day and age, right? Like, are you looking to do consulting to direct institutions and individuals, or are you looking to have an e-commerce? Like, either way, I think people need to be online, and online, the online tool can't just be a mechanism of marketing yourself. It has to be a mechanism of generating cash and money. And so the next stage, if you're looking to advance and add assets and add overall wealth, is going to be to tap into the online marketplace. And so some of the ways that you can do that is either buying an existing company online or building something of your own online. And so think about your business right now and think about whether or not, is it adaptable? Is it nimble enough to transition online? And if it isn't, what do you need to do to get it there? And so based on whether or not, if it's something that folks would be interested in, maybe what we'll do is come back and do something very similar, but we'll talk about a little bit more about, we'll show kind of a model for what that looks like in real time. And so the only difference would be that we would have to change the assumptions. We would have to change the profit and loss. It would have to be predicated on indicators that generate indicators or benchmarks that are related to online e-commerce websites. And we can figure that out. I mean, it'll take a lot of time, but we can figure that out. So if there's any interest in that, we can talk to Joelle and we'll put something together. It won't be tomorrow, I'll tell you that. But we can put something together. And we could do something within the near future, and we can have everybody back and we can talk about what that looks like for the most part. And what I'll do is we can create the model, but we'll probably bring in some experts to talk a little bit more about how to actually use that and what does online sales look like. So just to put it out there. And I think the reason I put that out there is if you're thinking about startup, think about online and e-commerce. That's just the next way to go.
I'm just going to jump in on there. I 100% agree, which is why a lot of the workshops that we have been doing at FIL has been geared around really growing your business online and utilizing the online platform to our advantage. Like I said earlier, the marketing series is going to be, like, we're at the tail end of it, but we are going to be offering it again. And that's a 5-week series that you guys should definitely look out for. I'll be sending you guys newsletters that will have different kinds of resources. So definitely pay attention to that as you're growing your business.
Thank you. That's awesome. Okay. So I think, I think we've done our part, and I think folks have enough to walk away with and understand this model well enough to add in their piece. So what we're expecting for Friday is that you all think about your numbers, and even if you don't have your numbers, just look into it a little bit in terms of what does your industry look like. If we can get, Joelle, I think if we know a little bit more about what the industries are that we're going to be talking to on Friday, we can run some industry reports and bring some stuff in to that conversation. So, and it doesn't take us long to do. We probably can't, we're not meeting in person. I was gonna say we can't print it, but we can probably share what those reports are, and we can probably share with individuals as a follow-up to Friday. So with that, that'll be helpful. So a little bit more about Friday. So what's gonna happen is that, and we can talk about this a little bit more, but what's going to happen is that you're going to come into this webinar space, and we're going to divvy people up between myself and Anthony, and then we're going to get into like a private chat room, a breakout room, where one of us will facilitate the conversation with each of you. And so obviously it'll look same thing like this. It'll just be just join it a little bit with a smaller group. And the plan is, and the hope is that people feel a lot more entrusting to talk about a little bit more about the finances of their business. And I will say, if you're coming into Friday and you know yourself, no one knows you better than you. If you know that you're less, that you're less comfortable talking about finances as it relates to what you got and what you ain't got, then what you do is put numbers into the Excel sheet as projections, and they can be estimates. So they don't necessarily have to relate back to your own personal financial situation. And so we can work with estimates, and that's more than okay. So we're gonna break out into these smaller breakout rooms, and we're gonna have some time to kind of go back and forth. And you can share your screen the same way that we share our screen. And what you know, particularly from what I'm going to do is I'm going to walk through some of the things that you have up and how they look and what numbers make sense, what numbers don't make sense, and what you should possibly be adding to your Excel sheet based on your industry. And then we're going to go from there. And then what happens after that is at the end of that, you'll have my contact information, and then we can set up some office hours for some one-on-one where we continue doing some of the same things that we're doing here. It's just that it'll be on a one-on-one basis. And yeah, and we'll go from there. And that's what TA generally is. That's what technical assistance time actually is. So whether or not you're looking for financing, whether or not you're looking for more investors, or whether or not you're just looking to legitimize your numbers, you know, that's what we're here for. Cool. I think I've talked enough. Am I good?
You're good. Oh, you have one more thing, PPP.
PPP. Yes. So I am going to direct folks over to Anthony for PPP. So generally, if you're an existing business and you are looking to get the PPP product, the loan product, which is the Paycheck Protection Program, there's an element of the ask or of the questionnaire, excuse me, that asks what is your, so it's going to ask for like a quantitative explanation of what your need is, right? And so, and it's going to be based on the average cost of your labor. And Anthony, correct me if I'm wrong, but oftentimes for these existing businesses, they you ought to have a year-end tax return, and a year-end tax return will generally tell you, or give you what the amount that you spent on your payroll. You could take that amount, you can average it out for 12 months. So what the total amount is that it says that you paid for payroll, you divide that by 12, and then once you have that, that's an average amount that you spent on payroll last year. And then you'll take that number and you multiply it by 2.5. And that should give you your asking amount of the SBA. And so for those of you, and I think particularly in this space, a lot of you are startup businesses for the most part. So if you're a startup, that's a whole different thing, because the PPP is to cover those who lost payroll income or payroll expense. But if you're a new business, I think the best thing you can do is you're gonna take the average amount that you've been open, right? You'll take the average amount that you've been open, you multiply that for how many months you've been open, and you multiply that by 2.5. But if you're not open, you don't have enough history, I think the priority from the SBA perspective on existing businesses that have some tax returns from the previous year. I think that's their priority. That's their focus. Anthony, anything you want to chime in on that one? Okay.
No, I think I'm available though. If you don't have my email, Joelle can share it with you guys.
Mm-hmm.
But I can if you guys have any questions, I can definitely help you understand the application, understand the program, or whatever additional questions that you have. Seems like one just came in. Yeah, of course. I'll provide my email here, and then no. All right, Johnny, all you. That's okay.
All right. I'm not providing my email, unfortunately. You can find me. I'm not that hard to find, but I think for the most part, for technical assistance stuff, feel free to follow up with Anthony, and I will talk and see you all on Friday. And if we have the pleasure of working together in a small group setting, then I look forward to working with you even beyond Friday as well. And so we'll get the Excel sheet out. Anthony will be in charge of that. He'll work with Joelle to make sure that you guys get that. And then from there, I will see you then, and we'll party all over again on Friday. And hopefully, every one of you come back out for Friday. And for those of you who attended Monday and then attended Wednesday, it's almost a no-brainer that you should attend Friday, because it's all building on each other. And so there's only so much that you're missing out if you don't attend Friday. And for those of you, if this is your first time, and then so most likely you have the experience of going through the spreadsheet and getting an overview of it, and then you're getting the spreadsheet, and then you also have the PowerPoint presentation. It's only right that we see you on Friday. So let's make it work. This was designed with you in mind. And so for us, what we get out of this is the experience of continuing to do our work and adding value to what we do. But in terms of what you get out of this, you get a whole presentation that kind of defines capital as we name it and define it. You also get a spreadsheet. You get an introduction to what we do. And obviously you get continued valued service from the Fairmount Innovation Lab. So it only makes sense. It's only right. So hopefully we connect on Friday. All right. Cool. Thumbs up.
Thank you. Thank you. Thank you.
Thank you, guys.
Thank you.
Thank you.
All right.